Welcome to episode 2 in the Trade Spotting series, How to Trade Real Estate Investment Trusts. In number 1, we looked at how you can go short on property without owning any. This is episode 2, where we're going to focus on those REITs, Real Estate Investment Trusts, that provide the largest degree of passive income, those with the highest yield historically. And we're going to take a look at their charts to see where you might get the best entry so that you can benefit from passive income and capital appreciation. Many investors spread their portfolio across instruments to reduce their risk. Capital employed in assets that provide a dividend or a yield often perform better than equities in certain market conditions. Equities rely on capital appreciation through growth. And in a low growth environment, money may rotate out of these assets into those that provide a reliable return, such as bonds, high dividend stocks, or property. The rotation of money between sectors can drive profits for a sophisticated trader and investor, but knowing where money is going next requires an understanding of whole market conditions. There are many who believe that the property market is due a haircut. Just this week, we have seen some potential trades going in that direction. In our first video on real estate investment trusts, we looked at how you can short these assets, and we suggested some various tickers that are worth possible trades. You can check that out by clicking the little video up here or in the link in the description, of course. And today we're going to discuss several REITs with historically high dividends. For those interested in this type of investment, hopefully this video gets the right amount of attention. We can put more resources into the similar topic. You might hear passive income and think, well, TradeSpotting, why not high dividend stocks? And this video is financial education designed to lead you to opportunity, but it is not financial advice, nor is it an immediate trade alert on the following tickers. This is simply one strategy that's popular during periods of high inflation. There will always be regional variations on these type of instruments. Much will depend on the location, the macroeconomic environment, and the professionalism of those operating these individual trusts. That being said, for many generations without exception, a popular hedge against inflation, particularly in Western society, has been property. A word of warning: many investors are surprised to find that real estate investment trusts can lower dividends when they feel it's necessary to do so at any time. There is no guarantee that high yields will continue, and these type of investments should be well considered. It is true that current economic conditions may be due to an overheated economy. If so, and if oil is at a high, if the dollar is at a high, and if it's also true that inflation will persist for the foreseeable, then many traditional portfolio hedging strategies will become defunct. Assets that can provide capital appreciation and passive income will become few and far between. Real estate investment trust companies typically have predictable cash flow and consistent distributions. Their best possible entry to your portfolio will be at a low. So let's take a look at these tickers and their charts for the starting points in opportunities. One further reminder before we get started: this is not financial advice. Real estate investment trusts are typically a 5-year plus investment. You might want to wait until these hit lows, but now is the time to learn how, what, and why, so you're ready for the when. And then a final warning: much of the market is slated to go down and underperform. Much of the inflationary benefits will be dependent on the timing of your investments. I'm sure you're aware of this potential. Let's jump into some of these REITs. I need to go first to that particular option, and then we load up the charts. Whoa, pardon me. And there we have it. What are we on at the minute? Triple M. That's from finishing our 5 and 5 video. Check that out if you've not seen it today. And the first one we're going to look at is AGNC, our first real estate investment trust. If you're not familiar with the real estate investment trusts, they are large, often publicly traded companies that buy and develop properties to grow. Since 1990, the overall real estate investment trust market has grown from 400 billion to 1.6 trillion today. The sector intends to provide individual investors with access to large-scale commercial property investments. So it's an attractive proposition, one might say. You can buy and sell these from anywhere in the world, though if you're not from the US, then it might be helpful to know that when I say a mortgage-backed security, what I mean is a property bought with a loan, much like a mortgage from any bank. But these are provided or issued by a United States government-sponsored entity, such as Fannie Mae, Freddie Mac, or the Government National Mortgage Administration, Ginnie Mae. So first up, we have AGNC. This is AGNC on the weekly chart. It's traded on NASDAQ. It's a mortgage real estate investment trust, and it pays a dividend of 11.85%. 11.85%. So of course, if you've got an investment that you expect to last for 5 years, that's going to derive 11-something% a year, despite the fact that that could be compounded. If it's to drop 50% between now and then, that would wipe out a lot of your advantages. In some senses, that's accepted when you're investing in these sort of things, because at least you're getting an income which protects you from that reduction in the overall capital value, which you wouldn't get from certain stocks that aren't able to pay a dividend when they're not generating money, or would predate a reduced one, and it wouldn't make up for the loss overall in the value of that particular share. So we're looking at AGNC with an 11.85% return. On the weekly time frame, you can see that it had a huge dunk back there in the Rona times, and subsequently we've gone back up to the top side, done a 1.13 extension, and you've put in a bearish second high. You've come back down, and now you're pushing back towards the center line, trying to push it back above it. I suspect we'll see a similar picture across the markets, and at this point it would be dodgy to go long, having moved back towards a 200 period moving average, this previous horizontal resistance, the 50 simple, and we'll likely see how you would wait here. You certainly wouldn't take this as an entry. We'll drop down daily and see if that recovery is likely to continue. Pushing to the 200, not yet above it, into the bullish control zone, but no break. And the high from the prior formation that you'd be looking to break, having gone through this one, would be up towards 13.23. Currently trading at 12.61. And I wouldn't anticipate this being presenting a massive opportunity right now. On the 4-hour time frame, you can see you've got a cross coming in with 50 simple towards the 200 period, 1165. It may well be that you need to retrace down to these areas. You're in the bullish control zone, so you might not start doing that immediately. And if I take this out a little bit, I don't see an inverted head and shoulders. I do see bullish divergence between these lows, so we'll take our Fibonacci from the high. You can see there's also a gap up there, so at some stage it might go there. You've held the 236 on a retest, gone back towards filling a flash, gone through the 382, found support at the 200 and moved back up to the 50% line, and this historical level of resistance is very, very close, yet you've not exceeded it yet. So this is coming into a period of resistance. If it does exceed it, the next target would be 1369. I wouldn't be trading it for there. I'd be looking for it to come back down, test the 236, and see if this trend continues when price action makes it back below. Should it make it back below this Fibonacci level and this downward sloping resistance, it might be on for a test of this other trend line in this downward sloping broadening formation or channel, whichever way you want to draw it. You could certainly make it a broadening formation. And if it does come down to these levels, your prior low within that formation, should you break the previous one at 1053 and give yourself a chance of an inverted head and shoulders, would be down at 9.79. That's nor itself is that an entry, but we'll pay attention to it at the time if I'm reminded. So that's a little bit of a look at AGNC. This is a mortgage REIT. It uses leverage to invest, mostly in agency-backed securities, as we were talking about, structured as repurchase agreements. And we'll talk more about that when we speak on the bond series. So stay tuned and check out these coming episodes. They're based in Maryland, and they've been in business since 2008. Analysts like this. Personally, I think that it is likely to come back and test this cross, and I wouldn't jump into it at the minute. But when analysts are talking about real estate investment trusts, they're typically not looking about the next couple of days or weeks price action. And after this, we're going to drop down to the next one, NLY. These guys, these are fantastic. They're based out of Uranus. Only joking. No. They're called NLY, Anally Capital Management. That's not a joke. Traded on New York Stock Exchange, ticker NLY. Also a mortgage-backed real estate investment trust, but it's grown and been managed very, very well over the years, and now has a very large capitalization relatively to other that provide the same sort of return. Not that there's many. I'll get to that in a minute. And they've got quite a large diversified portfolio. So to some extent, they've mitigated the risk with a basket of goods, but it is also set up, as you'll see, with paying a whopping 13.66% dividend, which protects against a huge amount of capital depreciation. But when we look at that most recent low and where price action is currently at a level of resistance, if it's to come back down and test anywhere around these levels, you're looking at the first previous low here in it around there. That's 13.54%. That's your yearly passive income disappeared already. And then if it's to make it back to that previous low, that's 25%, right? That's 2 years worth of so are these the places to enter? Not necessarily, and if you want to go short on these sort of things, refer back to episode 1. But there is a lot of information to be taken from this, despite the fact that it's not all dramatically different from our previous ticker, and that you can see the crosses coming in here on the 4 hour, and you can see that would also be meeting a diagonal level of resistance. If we take a Fibonacci from here to the low to the high, you've recovered to 236, you've made it the full way, the golden pocket and the previous high within the prior formation. At this stage, a retest of that breakout zone might be on the cards, so pay attention, folks. And this is more than 20 years also, since 2008. Interesting. Now we're going to look at ARR, Armour Residential. Immediately you'll see there's a flash at 7.37, currently trading at 7.87. This is traded on New York Stock Exchange. They pay a dividend of 16.85%. Yes, higher still. Similarly, they're based out of Maryland, right? A bit of a trend here, but investing primarily in residential mortgage-backed securities as opposed to many of the commercial operations of those tickers we've looked at previously. So here is that again on the 4 hour time frame, where you'll see I do a lot of my work for these sort of things. And we can take this Fibonacci, see what the retracement is on it. So you're obviously getting a picture of the overall market conditions, things that trade in the same sector in a similar way, but will have a different percentage moves between them to the top side and back down again, often depending on how highly leveraged they are. We'll see here a similar situation with the moving averages. So that's not a common trend, but a persistent and long-term trend, both short and long-term, matching up with similar patterns. And as you can see, the point to that would perhaps be that the strong get stronger and the weak get weaker. So those that are doing well, yet aren't necessarily losing all those gains because they're simply more reflexive, that would be representative of something that has a degree of strength. And we're talking about these guys backed out of Maryland as well, backed out, headquartered up there. So here's the golden pocket retracement back up at 8.29, 8.32 is exactly pushing towards there. Be possible. You've not tested the 200 significantly since going through it on the 4 hour, and you do have a potential golden cross coming in that would itself likely lead to a retracement in price action, and not necessarily a buy, but if price action was to come back to these levels, and everything else that we've looked at was also to move back down, well, this wouldn't be breaking anything in its own structure. Come back to test this previous breakout zone. If we drop down to the 1 hour time frame, see how it's doing right at this moment. Still in the bullish control zone. Can't argue with that. Positive slope, positive splay. You've managed to go through the 50%. You're still aiming for the golden pocket. So it could be that there's more to come on this one. And Sim, right? Chimera Investment Corp, also traded on the New York Stock Exchange. These guys pay a 13.9% dividend. As you can see, you've got your inverted head and shoulders and major move out of this thing here. Perhaps you'd be looking at this as being your neckline, downward sloping, a little bit sloppy, in which case this would be your implied target from this particular pattern. Take it up to the drop down. That suggests the fullness of that move would be around 1160. You've done a significant percentage of it so far. Of that 20, that's 247, so 75%. Well, you've got a very large degree of what you could reasonably expect from this particular formation. Looking left, you've broken this previous high within the formation, perhaps using it as support. If things do go up, and this is looking like, if this turns into a bull flag, then the next target would be in around those previous highs, and you'd be looking at 1196. Does that look like it's happening? On this particular one, back up to the 4 hour, you can see the 200 period moving average well above that. 50 simple's got a degree to grow before you meet it. It could be, I don't know, get my letters mixed up there. It could well be that there's more to come from this one, and a test of those levels would be possible. So we'll see. If there's more in the market, there's perhaps more in Chimera. They've got 13.95% dividend. Not too bad. The analysts, though, have been reducing their targets on this thing. If we were to look at this retracement back down against this move to the top side, you've gone beyond the golden pocket, but not quite made a full 886 retracement. And at this previous low, holding the 50 simple, pushing towards the top side, it looked like it had the potential to move up again. So analysts have been downgrading it. Fundamentally, they perhaps see some weaknesses. The reports on this are very recent, so that's slightly different from other things we've looked at with regard from the analyst's perspective. But still, I would say that if they move up, this has got a percentage to go, but they're all looking like they're a little bit weak at this stage. And next one, just quickly moving on now, Earn. Again, another high yield dividend. This is why we're looking at these particulars, because they are those that provide historically and have been around for long enough that you could say, in some people's opinion, it would be a reliable trend with regards to these particular type of instruments, that these have got some degree of security within them and have a high performing yield, which speaks to a variety of things, and you'll know more about any real estate market close to yourself. So bear that in mind when you're looking at these things. And now we're looking at Earn. Ellington Residential Mortgage Real Estate Investment Trust, traded on New York Stock Exchange, ticker EARN, pays a dividend of 11.9%, a little bit less crazy. Its manager mixes in non-mortgage backed securities to balance objectives and risks, according to their website. The most recent analyst report on Ellington was a downgrade from outperform to perform, market perform. But what is our take on this one? What will the votes decide? Downward sloping resistance, you've met that trend line. You've come in here and seen what would be a similar measured move from a similar downward sloping, messy inverted head and shoulders. 50 simple period moving average pushing to the top side. A lot yet before they cross, but you have met this downward sloping resistance and this horizontal level where you would anticipate finding some resistance, 875, 876 high for today. Currently trading at 850, and if we take a Fibonacci on from the high to the low, we can see you've made a 50% retracement and no more. If this doesn't push higher, I'd say this is less strong, and I'd be downgrading it as well. If this is reflective of the overall market, then it would be like we said when we first opened up the charts and started looking at these things, that it doesn't strike me as an immediate and obvious buy. So let's now stop talking all those lovely West Coastonians and move over to the New York Mortgage Trust incorporated. Again, a little flash making things slightly easier for us. As you'll notice, that is below where price action only currently rests, below a 200 period moving average on this 4 hour, and beyond a little gap that we've left in the charts. NYMT pays a dividend of 13.79%. Hard to argue with that. New York-based firm, clearly. $4.1 billion in their portfolio. Allocation of capital is very distinct from the others we've looked at, with 51% in residential mortgage loans, 30% in structured family investments, and the rest in commercial mortgage-backed securities. Non-agency residential mortgage-backed securities. And they've also been recently downgraded. They've got another flash below there at 258, so potentially losing huge chunks here. Let's take a look at this on the weekly. Flash back up at 3.9. Huge moves on this. A lot of volatility. When it moves huge amounts, and when it doesn't move, it's in a very regimented fashion. March them up to the top of the hill and he kicked them all back off again. Right, so let's look at that. Golden pocket retracement. Subsequently came back up again. This was back when everything took that similar hit. It failed to make a higher high here. This is quite distinctly more rubbish than everything else we looked at. It does have a flash back up on the weekly. It took a while to fill that lower one down to 1059, and that period of inflection as it went back up above a 236, having caught support at the golden pocket, could have taken a lot of the enthusiasm away for this thing. You tested the golden cross and failed miserably and persisted below the 50 and 200 period simple moving average since. So that doesn't look good at all, despite the fact there's a flash back up there. That looks like it could be the top for everything should it make that move there. Worth paying attention to for that. We'll drop straight to the daily time frame. You're finding resistance at the 200 period moving average, very similar to others. Positive slope on the 50 simple, but that's only a hint. You're in the bullish control zone, not arguing with that. You've gone through the center line and confirmed this potential signal, but only taken it as far as you could ever expect to, with a cross in the MACD here on daily coming from below a 200 period moving average. If we are to take this most recent high in this failed second leg up, 236 golden pocket retracement, you can't really be expecting much more for this in the short term. 4 hour tells us you've got a flash below 2.895. That'd be back below your 200 and on way to testing the 50 simple, filling a gap, and back below the 50% retracement. So you'd be looking at a 382 on this move to the top side. Not fantastic. If we were to take this in and say, well, it's been doing a golden pocket after golden pocket after golden pocket, perhaps that's what's next, then you'd be looking up for another test of this 236 confluent with this golden pocket here that comes in at around $2.50. And I certainly wouldn't be looking to take it long from anywhere above those prices. Okay, now let's take a look at the last high yield dividend real estate investment trust that we have for you. Is quite interesting now on the 4 hour time frame, where you've got a potential golden cross, a flash just above that, yet price action in the bullish control zone. This is ORC, Orchid Island Capital, also traded on the New York Stock Exchange. They pay a dividend yield of 17.59%. Okay, quite staggering. They're headquartered in Florida, so they've got certain tax advantages. Their trust uses borrowed money to create a portfolio of mortgage-backed securities. Therefore, they're paying out the difference between their yield and their cost to borrow. So a lot will depend on management's diligence and flexibility. Potentially greater short-term returns on this thing, but obviously a larger inherent risk in this security. Play your own game, play it where it lies. Let's check out the charts. As we say, 4 hour flash cross. Let's go up to the weekly and do as we have been. Look at this thing, nowhere near the recovery that other things have seen since these most recent lows in the market. It has pushed higher than its previous high before the breakdown when the Rona did its haymakers. At this stage, we can probably put on quite useful Fibonacci. 50%, held that upward move, higher high, and then disastrous falling off there with bearish divergence through the center line, losing that as you lost support of your 200 period moving average. Death Ross came through, and you're perhaps coming back up to test one of these, as you would expect in a downtrend. Let's take that high, this low, and we can see our movement so far has taken us to the 382. Weak, very, very weak, which is potentially foreseeable in the nature of the return you get for paying for this thing. Yo, on yieldos. So look at this thing, right? Ugh, awful, eh? Weekly awful. Down to the 5-day, because we'll pay some attention and see how awful it was there. Rank, got a test of the 50 simple happening in a minute. There you're looking and saying, well, do you get up to the 200? You would have to go beyond the 236 that you've dropped below so miserably. And tested 382 below, tested 50%, recovering all the way back above there, tested 200. I doubt it. It looks weak. 3.53, high of today 3.26, currently 3.22. Doesn't look great. You're pushing back above the center line, but you've got continuation divergence up the wazoo. There is a flash to fill. Sorry, a gap top side of that 4.18. That's a huge percentage move away from where you are at the minute. So if things move up, you have a target, but do we expect that? I don't know, like daily time frame, you've got resistance at the 200 period 3.47, which is higher than you managed to make it today, which wasn't inspiring me with anything. And then here we are on the 4 hour back, looking at that flash where the golden cross could come in, price action could test that, die a death if it doesn't hold it. 2.697. That's a trade to the bottom. They've got a previous flashback up at 3.83. So whichever one you get to first, you're getting a potential trend to the top side at the minute to look into this flash area, but you've got this current one that's overriding it. So if you get in around here, if it gets up to this previous one at 375, then you saw that previous target at 418 or so on. You've got from that an entry with a clear risk management area and an excellent place to target at 2.697. But I don't think that you should be shorting these things. There are other things to short should you want to go short, like SRS, for example, which we did in our 5 in 5 take this morning. That's our 5 stocks in 5 minutes. It's like an accessible series we do on the YouTube channel to hopefully attract new people to the things we're doing here, bring people into the fold, and demonstrate the validity of the technical analysis that we all together are doing across the Discord and on these YouTube channels. Check out Rocky Outcrop on YouTube if you haven't already. So SRS, this is an ultra short instrument set up to allow people to go long on things when they believe that market is experiencing a touch of weakness. Flash back up at 25.44 if things do break down. Need to recover this 200 period move if average. If that's to happen, you've got continuation divergence if you consider the trend to have changed. So we shall see how price action evolves on SRS, and that's what we pay attention to if you're going short. And finally, I'd like to touch on an important point should you be getting sucked into the world of real estate investment trusts. There are often great opportunities to be found in public, non-traded real estate investment trusts. These are regulated by the SEC, but their shares don't trade on major stock exchanges. Their share price, as it's non-traded, is directly tied to the company's net asset value. This often means that non-traded real estate investment trusts are much less volatile and offer a more predictable total return at the end of your investment, though that will likely be locked in for a period of time and face redemption fees should you cash out early. I will never ever recommend any individual private property trading platform on this channel, but I don't diminish these ideas or dismiss them out of hand. I do, though, see there's a lot of analysis that can be done on them, and I think overall they provide a good model that perhaps those people taking the course and progressing through this system, this continuum, this route we've laid out to try and create brilliant traders that can change the world. Hopefully there'll be a fund for these people to trade when they reach the end of the journey. And it may well be that we set something like this up at some stage, and it'd be great to learn from that and with each other on these tickers. So thanks very much for tuning in and paying attention. Thanks for watching/reading, because I'll try and copy some of this from the transcription into the Patreon post below, if that's useful for people. Thanks so much for supporting my efforts to change the world. This is not financial advice. This is TradeSpot.